Welcome back. You're watching The Money Show and time to get your portfolio queries answered. I have with me Hemant from Vice Invest, and also do not forget to send us your questions on our WhatsApp number and email ID. Do send us a detailed question where inform us where you invest, in what kind of funds, and what is the exact strategy you need from us. So, hello and good evening, Hemant. Welcome to The Money Show, and we will take Rohit Singh's question. And he recently turned NRI at 38, and he really wants to have an investment strategy for his retirement. He's invested 50,000 in Axis Small Cap and PGIM India Mid Cap Opportunity. He also has Parag Parikh Flexi Cap, Quant Active, and for 15 years he's planning to do this investment. He wants to understand if for the goal of retirement, are these funds aligned with the kind of goal he's lined up for himself, and also he wants you to help him allocate 45,000 he is also wanting to know as to what should be the changes in the current portfolio if needed.
Well, Kavita, I think in this case, his time horizon, he said, is around 15 years. So obviously for a time horizon like this where you're investing for 15 years, investing in equity fund, I think, is absolutely the right thing to do. So far, it appears that he's been investing lump sum money. He has 4 funds in the portfolio. There is a flexi cap fund, which is Parag Parikh Flexi Cap Fund. There is a multi-cap fund, which is Quant Active. Then there is a small cap and a mid cap fund. I think in terms of categories, he has done all right. He can continue with these categories. But there are a couple of changes I believe that if he can consider making, his portfolio will look better. Maybe it will perform better. These 2 funds are basically the small cap fund and the mid cap fund. I think in the small cap category, there are a few other funds which have been doing consistently well. And looking at the level of diversification and the way the money has been managed, I certainly believe that those funds have a potential to deliver a better return than Axis Small Cap even going forward. Some of these funds are Quant Small Cap Fund, Nippon India Small Cap Fund, even HDFC Small Cap Fund. You can choose one of these 3 in place of Axis Small Cap Fund. In case of mid cap, he has PGIM Mid Cap Fund. Again, I believe that there are a few funds which have been doing better, and I believe that again, in terms of stock selection, they have the potential to do better. It's like we can consider Motilal Oswal Mid Cap or Nippon India Growth. So these 2 changes, if you consider, as I already mentioned, that I think the categories that he has, they are perfectly fine. In terms of allocating money for the SIP of 45,000, I think the good thing is that so far he has invested lump sum money. Now he wants to start investing through SIP. I think it's a great combination where you have some investment through lump sum and also investing through SIP. In the existing fund, he can look at Parag Parikh Flexi Cap, where he can invest 11,000. Quant Active, which is a multi-cap, he can invest 12,000. And 11,000 each in mid and small, depending on which fund he chooses. In case he wants to select one of the funds that we discussed, he can invest in those. If he wants to continue with the existing fund that he has, the allocation will remain the same, which is 11,000 each in small and mid cap.
Let's talk about Meenal, and that's the other viewer's query. Okay, so someone has sent this question on Meenal's behalf and says that Meenal is 24 years old and she wants to do an SIP for the period of 36 to 45 years with a target of 27 crores and want to understand what should be the amount to get this corpus. And so far, 6,000 is what she's planning to start her investment with.
Well, Kavita, 2 important things here. I think the time horizon is 36 to 45. So if I consider 45 to be the time horizon and investing in equity fund, I think this is how exactly you get the benefit of power of compounding starting early. Assuming a return of 12%, even though I strongly believe that when you're investing in good quality equity funds for a period of 45 years, your returns can be much higher. But for the purpose of calculation, let's consider 12% return. She needs to invest 12,000 rupees, just 12,000 rupees to accumulate a corpus of 27 crore after 45 years. So I would recommend, I always believe that all 3 segments, market segment, large, mid and small, should be there in the portfolio. So 1 large cap, 1 mid cap and small cap fund. Nippon India large cap, 2,000 rupees to begin with. Motilal Oswal mid cap, 2,000 to begin with, and HDFC small, 2,000. As I mentioned, she needs to invest 6,000 more. Whenever she decides to invest that additional amount or increase the SIP allocation, she can increase by 2,000 each in these three funds. If she continues her investment process for 45 years, she can certainly achieve a corpus of 27 crore.
All right, Hemant, let's move on to Ishani's question. And she wants to understand what's the procedure of switching. So she wants to know if it is good to switch from the growth option and get into dividend option just to save tax. And is there any stamp duty on SIP? And what kind of market cap should be avoided right now?
Well, Kavita, I think this is an important question. Let me just explain that quickly. When you switch your money from one fund to another fund, it's technically a redemption in the fund where your money is there right now. And it's an investment in a fund where you're switching this money into. So basically, there will be a capital gain tax depending on how long you've been holding it. There will be a security transaction tax, which is 0.001%. Then when you move into dividend option basically means that the dividend will be added to your income, which means depending on what is the marginal tax rate, you will be paying tax on that. So my recommendation would be, if the purpose to consider opting for a systematic withdrawal plan, because I think one, you don't have to pay tax on the lump sum amount. Second, I think despite the fact that you'll be invested in a market-linked product, there will be more certainty in terms of amount that you get, because dividend can go up and down and it can miss out.
Sure.
As for the stamp duty, yes, there is a stamp duty every time you invest in mutual fund, which is 0.005%. And whether you invest in debt fund or equity fund or hybrid fund, you need to pay the stamp duty. Which market cap you avoid, again, it depends on what kind of portfolio you have. If you're building your portfolio, then I think the bias has to be large cap, maybe then mid cap, and then small cap. That's how you can build your portfolio.
All right, I think that with that, it's a time up today on the show. Thank you so much, Hemant, for being on the show and helping our viewers with their financial portfolios. And I'm going to leave you with our WhatsApp number and email ID where you can send us your questions so that we can do your life financial planning. And that's all on The Money Show today. Thank you so much for watching. Goodbye.